Kirk Duckwall, the House Geek here with Mastermind the Market, your real estate stats update for the Twin Cities area. All right, well, new year, new market, and new tools. What do I mean by that? We'll get to that here in just a second. But first, want to touch base on a couple of classes we have coming up here in January. First is our Hack Home Buying class. So if you haven't been to one of those, come check it out. Whether you're a first-time buyer, second time, third time, there's a lot of great techniques, tools, and discussion points we have in here, from mortgage shopping to get the best interest rate, where, when, and how to find the best deals in the Twin Cities, contract risk mitigation, understanding and navigating disclosures and inspections in there as well. So that is going to be Union 32 Craft House, January 21st at 6:30 p.m. And then a brand new class, estate planning and downsizing, from getting the most to giving the most. That's going to be at Highland Park Community Center, January 17th. We'll be talking about whether to have a will or a trust, what makes more sense, avoiding probate, and your real estate options as well. We're going to be co-hosting that with Provision Law, so hope to see you there. And again, yeah, if you know anybody who'd find any of these classes helpful, please pass the links along. I'll make sure that I have those available. All right, let's dive into the market and talk about what we have going on locally right now. Okay, well, we're at, like, historically the slowest week of the year has just gone by us. So showings per listing per week average down from 2.36 to 2.02. This is slower than last year's 2.8, so that's down 28%. And then total showings dropping off as well. Again, this is really normal. And one of the big things is we're coming off of 2 weeks here where we had, a lot of snow and then even more snow and cold. And our market is very weather dependent. So we are seeing things slowing down there. But there are some positive signs of the market and possible demand coming in. So mortgage purchase index coming off of some of its highest points in the year, as well as days on market being a little bit lower, and the total inventory of homes being lower than where it is last year. You can kind of see these two diverging lines here. This is the inventory of homes going up as we watch the blue here, the market meter going down. All right, well, we're going to hit that low point on the market meter, but that usually means as soon as that inventory bottoms out, like look what happened back here last year when inventory bottoms, the market meter starts going up drastically. All right, so this is one of our new tools. That's one of the things I was talking about. We also have our our market meter predictor. That is another new tool that we have. So really tracking based on all the data we've been putting in for the last 6 years on the most likely place the market's going to go. So our market meter is at a low. It is at, so if we go to the market meter scale here, oh, there's a picture of me. There's the market meter scale. All right, if we go to the market meter scale, at a 4 to 6, that's balanced market range. Anything above 6, now we're into seller's market. Above 8, extreme seller's market, right? Or very strong seller's market. Well, right now, we are at a 1.94. So into that strong buyer's market territory. However, this is the slowest week of the year. And with things like the mortgage application rate up, watching actually views on the MLS have gone up as well, that we are seeing this likely quick turnaround into the marketplace, bringing us into that seller's market territory very fast. So if we look here, likely we'll see the market meter kick right back up in short order. We'll see where it goes, 2.52 at the end of the year. By end of first week in January, 3.16. But look what happens by the time we're in mid-January. Now we're in stable market territory. And as we get into February 1st, we are in seller's market territory that quickly. So that's our new market prediction there. And the reason for that is, let's hop back over here to interest rates. We are almost a full point, over a full point lower, better on interest rate than last year. So if we look back at mid-January, 7.26. Right now, interest rate down at 6.20. So there are a lot of buyers that have been sitting on the sidelines. One of the reasons we're seeing that view rate pop back up, watching those mortgage applications going up. So You know, again, where is this market going to be going? Well, it's going to go up, and the predictor is saying it's going to go up quickly. So for buyers, you're going to start to see more pressure out there in the marketplace as that inventory goes down. And for sellers, maybe be ready for an earlier peak market than we had last year. Last year, I believe we peaked in April. Projections right now are a late March peak time. But that doesn't mean you want to wait until then to go to market. You want the market to run into you. So the best time to go to market is in that mid-February to mid-March timeline, but it's very weather dependent. That could change if we get a lot of weeks of snow, so make sure you keep an eye on that. As always, hopefully you found this information valuable. Again, check out those upcoming classes if you haven't had a chance to, or pass them along. Take care and have a great new year.